All right, we're almost ready to go. Let's just give it a few minutes.
Okay.
Hello guys, are you ready?
Yes.
Yep. Yeah.
Hey guys,
Yep.
welcome and thanks to everyone for joining our event tonight. So today's moderator is Sandy Peng from Fusion Capital. So Sandy will be moderating the panel discussion. Hello Sandy, grateful having you tonight. I'm Lily.
I was on mute. Hello, everyone. Thanks for having me. It's a pleasure to be here. And it's fantastic to have so many great panelists joining us today on this very salient topic. And the topic of conversation we're having today is about institution adoption of DeFi and unleashing new liquidity. We have joining us a couple of very distinguished guests. I was hoping that everyone can go around and introduce themselves to the audience. Maybe we'll start with IOSG and go from there.
Yeah, sounds good. First, thanks for inviting and organizing this event. So my name is Momir. I'm from IOSG Ventures. Basically joined IOSG early last year, and considering I have a finance background, I have been focused on DeFi research, also helping with financial modeling and simulations in IOSG team. And obviously it's been quite dynamic since I joined IOSG. We built a very strong DeFi portfolio across some of the DeFi blue chips such as Synthetic, Suma, 1inch, Dodo, and many other companies. Some of them you can see also behind me hanging at the wall. So that would be the brief intro. Happy to be here.
And Arthur, if you could kindly introduce yourself to our audience today.
Cool. I'm Arthur, the founder of Defiance Capital. Defiance Capital is a DeFi-focused fund based in Singapore. We are one of the most active and largest DeFi-focused crypto fund in the space. I'm personally one of the earliest DeFi community participant. Also been following and using and investing in Aave since it was launched in 2020, essentially. Yep. So that's something about me. Yep. I joined this space in 2017.
Great, fantastic. Thank you. Welcome here, Moma and Arthur. And Isa, will you be introducing yourself briefly, I guess, from Aave?
Yeah, sure. I'm Isa from the marketing and comms side of Aave, and yeah, really glad to see you all here. Thanks, Andy.
Great. Ruby, do you want to go next?
Yeah, sure. Hello, I'm Ruby. I'm currently taking charge of the lending and the payment business with Matrixport. And Matrixport is a one-stop digital asset financial service platform spin-off previously from Bitmain. And we are currently providing trading, lending, asset management, and custodian services to our clients. Till now, we are currently managing around 10 billion worth of assets, including our custodian services. Thank you for having me here today.
Great. Well, thanks for that intro. And Philip from mToken?
Hi, I'm Philip. Hi, Sandy. Hi, everybody. Thanks, Awe, for inviting. I'm Philip. I'm doing business development and marketing at mToken. And mToken, if you haven't heard of us, we are the biggest non-custodial wallet in Asia. So for Android, iOS, you can manage your Ethereum and lots of other tokens on mToken. Therefore, I would say we're not focusing on institutionals, but on the opposite. So maybe today I can shine light on the other part and give a little bit of context on that side. So happy to be here.
Fantastic. Well, we've all seen how much liquidity mToken and how many users they bring into DeFi. So it's always very exciting to hear a perspective from such an important market participant. And I believe the host for today, Stanny, do you want to introduce yourself quickly to your audience?
Yeah, I'm Stanley Kuleshov from Aave. I'm the CEO and founder. I've been building roughly 4.5 years decentralized finance, mainly on the Ethereum network. And before that, I've been building fintech applications and spending some time in the legal industry. Mainly at Aave, I'm working quite a lot on the product side and strategy, and of course community events like this. And currently, quite a lot of work relates to the institutional kind of a demand. So that's why one of these institutional events has been organized to spread more awareness about DeFi and regarding the institutional landscape.
Fantastic. Have I missed anyone? I think we have Irene and Pablo. If anyone want to jump in and.
Hey everyone, my name is Irene and I work on the business department at Aave. Nice to be here.
Great. Right. Well, if I haven't missed anyone, I think we'll jump straight into the discussion, and we will have 10 minutes for Q&A at the end. I think if anyone want to put their hand up, feel free to get my attention in the chat section. I think as Stanley said, recently we've been seeing a lot of institutional interest in the DeFi world, but how the institutions engage with the DeFi world, I think we want to hear from everybody what they're seeing from their perspective. So I want to open up the question to the floor. Like, what do you think from what you've seen so far? What would institution adoption bring to the DeFi world? I think everyone feel free to jump in.
Shall I start first?
Yeah, please. Don't be shy.
Okay. Yeah. So basically, institutional adoption would inevitably happen. As you mentioned, it already started happening. It is just uncertain how soon it will happen on a massive scale. And once this happens, it would certainly give additional legitimacy to the DeFi space. Also, it would make retail users more comfortable using DeFi applications. With all this potential capital coming into DeFi, we can also expect potentially normalization of yields in the DeFi, where we can currently see that the industry growth and also the demand for the leverage have been outpacing the inflow of the capital in the space, and therefore that's part of the reason why yields have been so high in DeFi. So in that sense, the more capital coming to the DeFi should also normalize these yields across the space. There are also several other aspects that we can touch on in the further discussion, but the same way as we can see many Bitcoin ETFs to be implemented in the near future. Eventually, we will also see like DeFi ETFs targeting the traditional folks. And yeah, definitely excited for what is in front of us.
Fantastic. So, I mean, I wanted to put this question to Arthur because he's very active in the Twitter world, and we all know how you know, influencers and the community has been a great influence on how a lot of projects develop. When institutions come into the space, how do you think they would play a role?
I think the role they play will be pretty under the background. And actually, I think that first of all, before we discuss institution, we need to define what it is. So to me, when you talk about institutional adoption, it basically everyone that is non-retail and coming from have a background of a more non-DeFi and non-crypto native organization will count as institutional adoption. And I would actually argue that we are already seeing some sign of it happening already. It's just that they're not very high profile because I think they just, for some reason, they don't want to be too well known. So I think, for example, we see one of the largest DeFi yield farmer wallet is it's called 0xB1. He or she even has a Twitter account. It's called 0x_B1. That's a Twitter handle. I think at the peak, he has more than $1 billion of asset farming across the entire DeFi space. So I mean, this wallet owner did not reveal who he is, but it's unlikely to be an individual. It's likely belong to an institutional wallet because 1 billion is a massive size. So I think what we have seen is they are actually bringing a lot of capital in the space, and they're also bringing a lot of professionalism. So in fact, we are actually seeing some of the projects, they're actually trying to directly talk to him, saying that, you know, we actually have a new project launching soon, or we have a new incentive program, or what we call liquidity mining. Do you want to come and farm? They actually welcome these institutional grade scale user to come and actually provide liquidity and jumpstart the initial network effect. And in a sense, that is actually also what we have been doing. The Finance Capital, we have a mid-9 figure of AUM. In the DeFi space, is considered sizable. We are also, a lot of time, especially for our portfolio investment protocol, we are always the first few to come in to provide the initial liquidity so that they can have an initial baseline. Okay, for example, Aave is a lending and borrowing protocol. But it has to have someone start depositing the balance there before people can borrow, right? So usually, like a fund like us that are there to provide the first deposit so that it can be borrowing happening. So I think this is a role that institutional player will have in the space, providing capital, liquidity, and also I think they bring some sort of a professionalism in the space. They probably will do a lot more due diligence on what kind of activities they will engage in, and they will lower the risk. So yeah, I think this is the main impact we have been seeing so far.
Great. I mean, but from Stanley, perhaps you can answer this question from a product perspective. When you say you're trying to engage with institutional players, what are you looking for from them apart from capital?
Yeah, as of course, like it really depends on what kind of like institutional demographic we are talking about. As Arthur mentioned, you know, institutions can be just large balance sheets doing practically liquidity mining across the whole DeFi space and various different kind of similar strategies. Or institutions can be actually someone who is already their strategies and their business models are in the traditional finance, or let's say in the kind of like a more centralized crypto space, and they're looking for new yield opportunities. For Aave, what I would say, and where kind of like the Aave protocol is very interesting for institutions, is establishing this kind of like a liquidity market where you have liquidity on particular interest rates formulas that are governed by the community itself. And this is kind of a very interesting value proposition, because as institutional participants, when you participate in DeFi, and you might get yield in terms of whether it's just depositing and getting interest rate yield, or actually governance power, it allows these institutionals to get more, I would say, skin in the game as they're contributing capital, which means that as the more further we go in time, and the involvement of DeFi, we'll see that these institutions who are early participating into the space, they actually will have more say on the markets that we are creating. And these markets are pretty much kind of like a global liquidity markets that can't be arbitrarily changed, and the decision making happens in a community level. It's just more of an opportunity than actually find yield. It's actually changing the way we have financial systems today and those opportunities. And that is what makes the whole space quite interesting from institutional perspective, because you become as an institutional part of these protocols in the future. And I think that's the kind of like a bigger picture here, besides the arbitrage opportunity that we have now in decentralized finance with the yields.
I have a question, Stani. I mean, do you think that's what institutions are looking for to become part of a protocol? Or is it more like a downside? Or is it both? There are different kinds of institutions looking for either one, or?
I think recently I've seen that it's becoming more interesting for some of the institutions that we've been talking, that they could actually be kind of like part of the stakeholders and somehow activate themselves in the governance process. It's fairly new to them, because these institutions has been usually participating in markets where they're trading against counterparties in a venues that are owned by some sort of like a central settlement company, or they're trading and using network that is just controlled by like centralized exchanges, especially when it comes to centralized like the cryptocurrency field. But I guess like what's fascinating to see now is that when you realize in the institutional level, kind of like when you are able to be part of something like, let's say, our protocol or the other protocols in DeFi and have a saying on those protocols, it actually means that you could adjust the markets and have a voice how those protocols will be developed in the future. And because these protocols become practically like mission critical finance stack to those institutions that are participating, it allows them to actually get a lot of value out of the system and ensure that they are developed, these protocols are developed in a way that actually will help them in the future. And it's a very different setting, but it also ensures that these marketplaces are kind of like built together. And this is going to change the dynamics substantial what we have seen before, where you go just markets where you have a lot of liquidity because maybe there's various reasons they're bigger market participants, but then the kind of like weight there might not be very favorable for you. And with the community-owned protocols for institutions, it means that if you find opportunities early on and participate in those opportunities and support those protocols and build together with the community, you actually have a place where you can kind of like have early advantage as well.
Thank you. I wanted to put a question to Ruby from Matrixport. You mentioned that Matrixport is managing 10 billion in assets, and I'm sure you don't define Matrixport as a traditional financial institution, but have you seen any interest from financial institutions or any of the asset management coming from a more like traditional centralized financial institution?
Yeah, definitely. We see a lot from our trading and lending desk. But we first echo to what Stanley just said, that those institutions that adopt DeFi protocol early will see really good opportunities before. Because Matrix, I think we supported quite a few DeFi protocols within our applications and products as early as this February last year. February this year. And we see quite significant user and asset growth into our applications, and those we help our clients manage those assets and put them into DeFi protocols really bring pretty good yield to our clients. So that's why we also support RB in our applications and in our custodian services to our institutional clients. Our clients could just use DeFi Wallet Connect to get access to RB there. And for the institutions, traditional ones, we see one kind of them, they hold BTC very early, maybe as early as 2018 something. And they started to enter into the lending business this year, trying to code stable coins from us. And those amounts are pretty significant. So we see quite a mature and professional institutional adoption to the crypto lending and the trading business, just not only holding the Bitcoins, they are entering much deeper into the industry. And they are definitely acquiring more professional support in trading, in asset management, and in the whole stock that financial services here.
Are you seeing more and more traditional institutions holding their wallet, say like the giant wallet that Arthur mentioned, or are they going through intermediaries or, you know, custody services to access projects such as Aave?
I think standing from our point of view, we are mostly interact with the clients that are using intermediaries. We have clients saying that, oh, we cannot directly touch the smart contract. We need the intermediaries. And we are not supposed to exposure to any like DeFi risks with smart contract, but still we want some yield exposure and return from those DeFi protocols. So they need professional intermediaries that even could provide professional custodian services together with some insurance services here.
Interesting. I guess M Token is kind of in a similar position. I mean, Philip, do you think you have a lot of institutional clients, or it's mostly retail and you don't distinguish between the two?
Yeah, first I'd say like we don't know who our clients are, right? And I think that's maybe one of the keys. When Matrixport is a custodial solution, which is what I guess institutionals are looking for. And that's kind of my part of my definition of institutionals. And I'm Token is non-custodial. So we started in 2016 as an Ethereum wallet app. You would have your private key. If you lose your phone and your private key, right? The scary part. Similar to MetaMask, you lose your tokens. Now we have lots of more blockchains and other tools in the app, but it's still the same. It's still the same setup. It's a non-custodial wallet. So you can be anybody. You can have, like Arthur said, 1 billion in DeFi, and you can use IM token, just like you can use MetaMask. But I would say there's this, well, at least we do have big users. We do have big users, and I think in our Series B announcement recently, we talked about the 50 billion in assets that people hold using IM token, but not IM token the company holds, right? To answer your question, there are big users, but I would say, and I would guess, those users aren't what Arthur defined as institutionals. I would say those are crypto insiders, people that were in crypto early and that know how to use a non-custodial wallet. At the same time, we provide, like we have hardware wallet integration with IMKey hardware wallet, so that there is another level of security if you want to have it. And non-custodial itself is for us the security proposition. Right, you are in control, which is completely different from custodial solution. But institutionals, I would say, I would guess, are looking more for custodial solutions right now. And we can talk about it later. Like in the direction we are going, I would say it becomes more and more friendly while still being self-sovereign, non-custodial. But we can talk about it later.
Yeah, sure. I mean, this is an open discussion. I think, feel free to jump in anytime. I think a lot of really interesting issues have been touched upon here. And we defined institutions as a fairly like non-descriptive term. It could be it could be a wallet, or it could be a centralized custody service. And all of these entities engage with DeFi in slightly different ways. I think the next question I want to put to everyone, all the panelists here, is how do we think institutional adoption in DeFi unleash new liquidity to the market? I mean, I want to open this up to the floor. Anyone can jump in.
I guess.
Oh, go ahead, Momir.
Okay, yeah, thank you. Yeah, so basically, I guess we, as other participants just talked, we see a lot of capital coming into DeFi. I think another way how institutional capital is entering DeFi is also through the crypto investment firms. I think recently we see many crypto investment firms raising a huge amount of capital, and I would assume that much of this capital also comes from the traditional institutions and traditional finance guys. Also, many Wall Street guys starting their own crypto funds. So in that sense, we are seeing a lot of interest from the institutional side and traditional side to join the space, and therefore there is now like a lot of liquidity in this VC space. So I think when we look at this liquidity in the early stage investing, we can see now the obvious implications of this much liquidity coming into the space is that rounds are getting much more competitive. Also, it is much harder to get allocations in the current rounds. Like in general, the rounds are oversubscribed. So that is the first implication of more institutionals being interested in investing in DeFi. I guess Ruby can talk a bit more from the other side of things, like from them participating in the DeFi application. But also, I think this is important aspect where we see many of them trying to get exposure to the early stage projects and basically being a part of the new financial paradigm. And then in the future, like there will be implications in other layers as well, not just in the early stage investing where we already see a lot of new capital coming, but also I would assume there will be many like more professional market makers, and then that will also have the implication on markets being more efficient, maybe for them capturing the yield spreads, using the arbitrage opportunity, making markets. So there would be definitely different implications, but yeah, maybe some of the other participants could reflect better on those aspects.
I could mention as well that like kind of like what we see now in DeFi, the liquidity is pretty much like very general purpose, which means that say that we have, for example, we have this whale that Arthur mentioned in the space that has a 1 billion worth of balance sheet and is actually doing a lot of different kinds of strategies, might provide liquidity, for example, across Uniswap, SushiSwap, and also like new yield farming opportunities or depositing into the Aave protocol and various other things. But I think what we will see like as more market participants come and liquidity comes into the space from the institutional side, we'll see that this liquidity starts to kind of specialize in different kind of activity, and we'll see like more I would say market makers, but we will see also like different risk profiles. So we will see liquidity attaching into certain type of risk. It might be just a money market risk, for example, lending, borrowing, or let's say we might see liquidity going into the DeFi options market. And eventually what happens is that those particular products become, and their market become more efficient because of that reason. Since now you kind of like, as a protocol builder, and these different community owned protocols and communities, they are competing on the same liquidity in most of the cases. So the protocols and the products are designed as easy as possible to attract the liquidity. That means that the product is usually separated from like the perspective of for getting liquidity in. But I think like this specialized capital and categorization will just bring more efficient markets in DeFi, and that just kickstarts even more interest from institutions.
Yeah, and just would like to echo some from Stanley that we see that institutional investors have more strict risk appetite, that they may only want to invest in those top protocols that have been run really long time and could be certified pretty safe by the market. So I think the institutional liquidity coming into the market would help those top performers to still be top, and we'll see the more centralized effect for the liquidity in the DeFi protocols coming into those top players. And also we see one interesting thing here is the liquidity coming into DeFi protocols directly and indirectly. For directly, we see that they can directly interact with DeFi protocols through ARM tokens or through our custodian services. Institutional liquidity coming into the market through our lending desk, and those capital providers may only want to expose to the trading players or the miners that have no smart contract risk exposure. But when the capital coming in, those capitals will be indirectly lent to the DeFi farmers that also playing maybe like institutions or big giant whales that who lend from the CFA players like us, and those capitals who indirectly go to the DeFi protocols and provide more diverse capital to this market.
Great. I have a question for Ruby. Does your clients have a strong preference for their strategy, or is it kind of active? Is it actively managed by Matrixport, or they're passive most of the time where you suggest a strategy?
We have to define what kind of clients you are referring to. We have different kind of clients that they passively put asset within our applications, and we have different kinds of DeFi products offered to them. Say that we have DeFi selections that we only help them to exposure to mature protocols like RV, Compound, or Curve over there. They are pretty safe, but the return could be low. And we are also launching like a little bit riskier exposure that to those DeFi protocols on BSC or Hackle that could provide higher return, but in the contract you may expose to higher risk. So those at that point of view, our clients will have their own choice to those products. But once they deposit money into our applications, we will help them to put them into the DeFi protocols and just lay the assets over there. And they can recall their asset back once a week or twice a week, subject to the specific products they subscribe to.
Thank you. I have a question for Arthur along the same, not exactly the same question, but you mentioned before how you actively provide liquidity for newer projects. As a fund, how do you weigh the risk reward for doing that versus investing in projects directly? And do you think by providing liquidity, you're adding more value or having more say in the project? What's your thinking there?
I think it's not on a case-by-case basis, because for some project, like there's a term called fair launch, which essentially means that the token launch with no prior investor interest, and it's basically for the entire community to earn the token through providing value, such as providing liquidity using the protocol. So in that case, you can't really buy it anyway. The only way you can obtain the token is to provide liquidity, to use the protocol to earn the token. So it's actually a little bit like a proof of work, but it's more in like a DeFi context. So that's one thing. We have to provide liquidity to get a token. How do we decide whether to farm? I think that it's not either or. It depends on the situation. So a lot of time we do it for strategic reasons, because it's our portfolio investment. So I think that we know the team very well. We know the effort they put into the security and the coding process. So I think we feel comfortable enough to farm it and to provide liquidity right from the beginning. So yeah, that's how we've been doing it. Yeah, I think generally it's not either or. Sometimes we invest in the token, but we are also providing liquidity as well. Like for example, Dodo is doing very well, but we have been providing liquidity since day one, and we are also an investor in Dodo as well.
Okay, so you both invest in their token directly and provide liquidity at the same time for projects.
Yes, correct. Yeah.
Okay.
Yes.
But as more and more institutions, so like hypothetically, like larger institutions come in, do you foresee that they will play this role for newer projects, or do you think they, do you think that would change the dynamics between investor and project relationships? Because you're obviously more active than say somebody who's, got a few billion, at Matrix Port, presumably, in terms of like project engagement.
I think that the more, like, if you're talking about like a few $1 billion of capital, I think they're really focusing on the more established protocol, like the more mature one like Aave, Compound, or MakerDAO, because these protocol have went through the test of time and has proven resilient. There's been no incident so far. So this is what we consider like the blue chip of DeFi, and I think this is where they really get started. So I think that Compound or an Aave, I wouldn't be surprised to see there's like $100 billion lock in either of the protocol in 2 years time or even 1 year times, if and probably a huge chunk of it are like a really institutional capital. They probably have a way of purchasing an insurance on their deposit on Compound, and if even after the deposit it still makes sense, they might do it. And the insurance can be either off-chain insurance or like an on-chain insurance like Nexus Mutual. So I think that this will happen, and I think and especially in a global low yield environment, this is there's a high chance that this will happen. And another way from the institutional level is becoming a bridge. Essentially, it's very similar to what Matrix Port does. Like the end user can interact with the DeFi protocol through the bridge. It can be like in the form of like a fintech product, such as like a Revolut or Monzo. They have some way to interact bridge to the Aave directly, and the user probably wouldn't even realize they're depositing their interest into Aave, or even if they realize, they're not interacting with the DeFi protocol directly. So I think that you're definitely going to see some intermediary kind of action from the institutional player. Yeah.
Thank you. I have can Momar, can you answer the same question? Like, how does IOSG weigh the risk reward for liquidity mining versus like investing in tokens directly?
Yeah, definitely. So we are implementing similar practice as Arto. So if we invest in a very early stage project, we also tend to support them with liquidity provision in very early stage. For instance, one of our portfolio companies, Liquidity, they just launched their product on Monday, and we are extremely excited and working very closely with the team. So we've been also one of the first liquidity providers in the protocol. There is obviously this additional risk that we need to assume, but we also need to have to assume this risk because like the help for them is the most important at the beginning. So in that sense, it is also another way for VCs to provide strategic value to portfolio companies. So as Arthur mentioned, these like protocols such as Aave and Compound, they already been battle tested, they're already time tested. So it is comfortable for people to provide liquidity to, but also for these new protocols, despite they go through security audits, there is also potential bugs. So there is additional risk that we need to assume, but that is a risk that we are willing to assume to help our portfolio companies and also to provide strategic value to them.
Thank you. For our next question, I think two of our previous guests mentioned that how, Aave is a blue chip product and it's attracting a lot of institutional interest. Stanley, I wanted to ask, like, what do you think, is there a strategy to, or any sequence or you want to approach like a gaining institutional adoption? Is there a possibility that, say, a major, like a big institution decides to allocate a huge amount of like capital into any particular pool, or, changing the diversified nature of Aave users? Do you think that could potentially have an impact, or do you not think that's, a major risk?
No, I do think it's kind of like a positive impact, because like the adoption also, like, it doesn't happen only on the kind of like institutional level, but there's like also parallel adoption on the retail level as well. So I think these two demographics go in hand. But I think like how to get a institutional adoption, it's pretty much I would say like a track record thing, because to get into bigger balance sheet, you need to actually you need to tap into kind of like a markets or demographics that take less risk. And to take less risk, it really requires kind of like the protocols to mature, like technically, as more time passes, these protocols become less vulnerable, and also kind of like the risk metrics with all the collaterals, the assets that are used in the Aave protocol decreases over time. So that's the kind of like a way to do it. I don't think there's a secret recipe of like that. We will need to actively pursue institutionals, because I would say that as far as we create innovation and remove capital inefficiencies, provide liquidity into new markets, and make it accessible to everyone, that by itself is such a big value proposition that it really brings people together and brings institutions as well. And it's kind of like a matter of time when risks are decreasing sufficiently enough that it attracts bigger balance sheets. And I think that's kind of like where we are now with the larger institutions.
I've seen in the news recently that Aave's been applying for various licenses in different jurisdictions, and there's been some very senior hiring of compliance officers. Is Aave's strategy to apply for licenses globally, or is it to help existing institutions with license to come into the space? And do you think there are any major barriers with either strategies?
Well, there's two things. There's the Aave protocol that is running autonomously, and it's decentralized, community governed by the Aave token holders. And then there is actually one of the integration entities that kind of like has employees of the Genesis team of Aave, and one of that entities has applied for electronic money license in the UK and received last summer. But the idea is to bring new user base into the kind of accessibility and close to the decentralized finance, and eventually kind of like increase the adoption. But I think it's just like one of the routes to get more exposure into the space and more adoption. I think the institutional route already is another one. There is a lot of integrations into the protocol itself from custodians. Matrix Sports is a good example. We have European, US-based custodians as well. And those custodians also provide access to various fintech companies in terms of custodying digital assets. And our goal is kind of just make it more easier to access our protocol when that kind of like a opportunity comes to the fintech industry as well. End of the day, like finance becomes very close together, whether it's like fintech, traditional finance, and what we have in DeFi, because we're just building technology, but the technology allows just kind of like changing the dynamics. And these dynamics with community ownership and immutability and transparency are just bringing very big step in innovation. And what we have today in traditional finance, that's it just becomes kind of like a very natural step to progress, but it just takes time because the way the old financial systems are built till this date.
Interesting, thank you. I think we've all seen like a lot of announcements from Uniswap lately about their upcoming version 3, about how it makes liquidity provision like AMM more efficient. Is there, is there anything that Aave is doing in a similar effect in terms of its contribution to the community, or are there anything you think, what do you think about this type of creative processes in order to make liquidity more plentiful?
Well, interesting part about the, I would say, Uniswap version 3 is that it makes the market making strategies more customized for many of the market makers and brings the liquidity most likely. I think another approach has been done with Aave together with Balancer, where, you know, if you think about AMMs, most of the liquidity isn't traded, so it's just the tip of the iceberg that gets traded, and the rest of the liquidity is there for the reason to supply part of the market making strategy. And what Balancer has done very nicely on kind of like a different development path is that they have in this version 2 this kind of like an asset manager feature that could hold partially of the funds they have in the AMM in the Aave protocol to earn more yield and kind of like increase the capital efficiency in the liquidity providers and also like the earnings. And I think that's a good example like what we have been doing recently. And of course, we have the AMM market where you can use the Balancer LP shares for the Uniswap liquidity provider tokens as a collateral. And that's a way to unlock more liquidity.
Thank you. One thing I've been kind of dying to ask all the major blue chip like DeFi projects, and I want to ask the same question to MToken and Ruby and IOSG later, is that do you foresee any major competitors to Ethereum in the horizon, and are you planning on building on any other chains? Perhaps Philip can chip in first.
Yeah, I only see Ethereum on the horizon, I think. No, but to be serious, in general, are we still talking about institutional adoption? In general, in general, it's a pretty big question. I would say, of course, there's like a big network effect, right? And obviously, Bitcoin is there. Bitcoin is really big for one use case and has a brand. Everybody knows Bitcoin. Even like if you ask your grandma, if she knows crypto, she knows Bitcoin. That's obvious. And then for smart contract chain, Ethereum has a similar effect. But Ethereum not only has the brand, but Ethereum also has the network effect of probably mostly one DeFi, right? So DeFi Legos have a network effect. Because protocols built on Aave and other protocols built on other protocols that build on Aave. And then if you build on a new chain, you don't have Aave to begin with, and you would first need to build Aave to build the protocol that builds on a protocol that builds on Aave. And then second, the developer tooling and everything around it and the community. Of course, it's pretty sure that Ethereum is really big and has the effects around it to stay big. Is there another question we should ask? I mean, there are legit benefits that other chains already have right now, right? Ethereum doesn't have, I mean, ETH2 is only a beacon chain right now. There's much around it, and there are other proof of work chains that already implemented a little bit more of proof of work and kind of where Ethereum is going. So there is a potential for those chains to build something. But of course, they have to catch up, right? They have to catch up on all those points I mentioned before: community, developer tooling, and then build those network effects, especially in DeFi.
Okay, well, if your answer is only ETH, then I guess the natural question is, are you going to be picking a layer 2, or are you going to have like a multi-layer 2 strategy?
Okay, so for IMToken, we do support 12 blockchains right now, and then we do focus a lot on Ethereum right now, which is we just released a custom node feature that I think MetaMask also released not too long ago, where you can add remote node connections, so something like Infura for layer 2s, but also for something like Binance Smart Chain and Techo Chain and others. But there is a big focus on layer 2. And we did just release last week native support for CK Sync from Meta Labs. That's a layer 2 on Ethereum. And then very soon, we should announce updates on ETH2, which I think will be a major update that no other mobile wallet has released yet, or non-custodial wallet for that. So there is, I think currently we have a big focus on Ethereum, also because there are all these developments on layer 2. There are all these developments, maybe less on ETH2 right now, speaking about wallets. But yeah, I would say that's a big focus.
Okay, thank you. Ruby, you mentioned that, Matrix Port also supports BSC and HECO, and of course, being a custody solution, it makes sense to be multi-chain and provide as many different, access to different projects as possible. What do you think about this question? Like, do you think there are any major challenges to ETH, and would you be kind of focusing more on one chain or another, like any outlooks in this aspect?
I think for Binance Smart Chain or HEC or other EVM compatible chains, they are playing as a chain, but also playing part of the Ethereum ecosystem. We see like other chains like side chains like Polygon or XDAI were like nearest building bridges that link the assets back to Ethereum. I think Ethereum is still currently the major part that hold the most assets and users over there, but those EVM compatible chains, they do have attracting new users and new developers that because they are cheaper and they especially for those small teams. So for us, that as our custodian services, we are supporting as much as those chains possible, and also we are trying to link up the assets into other chains, asset on other chains. Like we are also launching a project called AM tokens, which bringing Bitcoins or BCH Litecoins into Ethereum ERC20 format and bring those assets into Ethereum ecosystem. So to answer this question, that we think Ethereum is still big and it will still be big over there, and those competitors are mostly currently playing as part of their ecosystems, and we also support them to support the whole large ecosystem.
Great, thanks. Momar, I know IOSG has just recently or planning on launching a like a Polkadot focus fund. Like, what are your views on the like the strength and continuity of the kind of ETH ecosystem?
Yeah, I guess a look at our portfolio would also tell you that we are believers in cross-chain futures. So we have a large exposure to Polkadot, Near, Cosmos. Obviously, there are many other legitimate teams. And for instance, we see that Solana ecosystem is also not negligible. So in that sense, I think that cross-chain reality is now quite obvious. Having said that, we also see that EVM compatibility is extremely important. We see this at the example of the BSC, and we still see most of the talent being concentrated in the Ethereum ecosystem. And in that sense, most of our investment in the application layer is in the Ethereum ecosystem. In the Polkadot, we are also supporting the ecosystem by supporting some of the projects, mostly infrastructure projects, but also some of the projects at the application layer. And obviously, as you mentioned, we are also considering the DOT fund in order to provide a SIP support to some of the portfolio companies and also to participate in the parachain auctions. Yeah, again, just to repeat, we still see most of the talent being at the Ethereum, so we are very optimistic about the Ethereum future as well, although we believe that the cross-chain future is inevitable.
Great. Arthur, thoughts?
I don't have any special thoughts on that. Yeah.
Well, Stanley, I know Aave's recently announced a partnership with Polygon. And are you planning on working with any other chains in particular, or going to be focusing on Ethereum and working on layer 2 solutions?
I usually say that Ethereum is kind of like our headquarters. So where we as a community want to settle transactions and kind of like get the underlying security from. I mean, that's where Ethereum is very good at. But also we know that kind of like the gas cost is very much of a problem for many of the users and depositors. That is why it's important to kind of like experiment different kinds of solutions and also empower different kinds of communities that are kind of surrounding the Ethereum ecosystem, whether it's layer 2 solutions or side chains or some sort of like a hybrid approaches. So now that we created the market in Matic, it practically means that as a fraction of a dollar, you could pretty much like deposit into the Aave ecosystem and earn yield. And this is very empowering because that means that deposits as small as like $50, $100, $200, even like a short period of time, are yielding for the depositors. And that's kind of like a very empowering functionality that we have now. And I think as time passes, I think we're going to have more the Aave protocol infrastructure across layer 2s as well as they become mature. So definitely, like we see the Aave approach as a multi-chain and also like a layer 2 approach in the future.
Okay, great, thanks. Well, thanks for all of our guests for sharing today. I think we have some questions from the floor. Some great questions as a matter of fact, but some of them we have kind of touched on already. So the first one is, what are your plans for layer 2 going forward? I only see a few assets available on Polygon. Also, why is deposit yields as low compared to CeFi apps such as Celsius? I guess that's directed at Stanley.
Well, the thing is that DeFi protocols, they take kind of like I mean, when rates are lower in DeFi, it means usually that they take less risk because the lending is over collateralized. In cases where the rates are higher in DeFi, it means that there is some sort of like a temporary arbitrage opportunity. But at the end of the day, if you're depositing into centralized provider, you kind of give up of the custody and you might lose the transparency. It's really much of a kind of like a brand thing, like which brand you trust more. And I don't think like CeFi is going away. Actually, it will be kind of something that supports decentralized finance. And I just think like what's important for DeFi is that it's transparent, that all the markets and the market data are kind of like visible, available for everyone to audit. That's like the key component of decentralized finance. And I think in the future, like DeFi and CeFi, they pretty much are just working together, where DeFi is part of the tech stack and part of the markets, and CeFi is pretty much services built on top of decentralized finance. That's how I would vision.
Great. The question from Mira, is there a plan to bridge Aave liquidity to other EVM compatible chains such as Binance Smart Chain, Harmony? And what challenges do you see for inter-blockchain composability?
I think it's pretty much like up to the Aave community, but as a community, I think it's quite open into different kinds of chains. The issue with the Binance Smart Chain is that, you know, the validator access isn't that open at the moment, but as the Binance chain is growing, I think that will change in the future. But it really gives a accessibility to a kind of like a new user group as well. But at the end of the day, I think like technically it's easy when there's EVM, but it really depends on the Aave governance in the community where the protocol could be deployed.
Great. What is the response to institutional investors when they ask, what happens if Aave has a run of the bank situation? Is there a situation where this could happen?
there's always risk, of course, but the Aave protocol is kind of like unique because it's compared to other lending protocols because there is a safety module where Aave, the Aave token holders are depositing Aave to backstop the protocol. There is roughly over $1 billion worth of Aave there backstopping the protocol itself. And usually, I would say, like in a bank run situation, even before that safety module will be activated to compensate anything, the A token receivables that you get when you deposit into the protocol, and if there is full utilization, so there is no liquidity that you can withdraw, what happens is that those tokens will be traded at practically discount if you want to exit earlier from that position. But this, with all DeFi, there's always risk involved, and that's something that everyone needs to be kind of like keep in mind.
Interesting. So the next question is related to insurance, which I think Ruby would have some really interesting thoughts to share. The insurance would probably be important for a lot of institutional investors to provide liquidity. Any plans to provide insurance in the protocol, either as an opt-in or by default? I guess this is targeted at Stanley, but Ruby, feel free, to answer that first, in terms of what you think is important for your clients.
Sorry, I lost the second half of the question. What was that? Is that insurance important for the institutional clients to come in?
Yeah. So any plans to provide insurance as an opt-in or by default? How is that done at Matrixport right now?
We are not in touching with insurance at the short term. It's not in our plan, but we do see there's an increasing demand from the institutional clients asking, especially when we tell them that we are putting some of their assets into DeFi protocols. They're asking that if there will be insurance for those protocols once it's hacked, or how is the insurance policy will be priced and how is the claiming process would like to be. We see increasing demand over there, and we know there's a lot of players, including the traditional insurance companies and new DeFi, the insurance protocol like Nexus Mutual or Insure is trying to provide such kind of services to the clients. So we see this as a field to racing, and we see demand here. It's just that how this problem going to be tackled, how to lower down the policy costs, and how to ensure the claim process to be transparent and claimable for those institutional clients.
Sure. Stanley, any plans to build an opt-in insurance on the protocol?
Well, not specifically. I think kind of like the backstop module is like insurance at one level, but what's cool about DeFi is that anyone can come and build that on top of Aave, and I really very much encourage people to do so.
Okay, fantastic. Okay, so one more question from the list of questions. What is Aave's roadmap in Asia from Wu Shu Dan?
Yeah, I think for us, what's important is definitely like now institutional adoption, but I would say kind of like with the Asia market, it's pretty much now multi-dimensional. So we want to focus on building a community in Asia, and building a community is it's not the easiest thing because like it's a very large and extensive market with a lot of dimensions. But that's kind of like what we are doing at the moment. So it's an important market to us, but also like we want to understand what the DeFi users want there and how to implement those kind of like improvements. That's like kind of our focus point. So pretty much being in the grassroots and building the community.
Fantastic, great. Well, I want to thank all the panelists and all the questions from the floor. We have a lot of questions, but I don't think we'll have time to get through all of them. And if I can ask all the panelists to share kind of a leaving thought with the floor on, your predictions for institutional adoption in the next year or so, or any interesting aspects you want to see on the Aave ecosystem. Philip?
Yeah, I mean, I can share a wish. I think I already said that I guess institutionals wouldn't are currently probably not using non-custodial services that much, but to me, that's actually one of the core components or one of the core benefits of crypto in general, right? The user has the power over, the control over funds, over what he's or she is doing, and when. My wish is that this will be easier for institutionals, however defined, that this will become easier for them too. And I think we're going that way slowly with, we did announce we are looking into keyless accounts, account recovery. There are smart wallets who are making big progress, hardware wallets. We have our own brand. My wish is that this self-custodial, non-custodial tools like I'm Token will become easier to access for everybody, I guess, and that includes institutionals.
That's a great vision. Thank you. And Ruby?
Yeah, let me unmute myself. So first, I think there'll be more bridge like agent like MatrixPort coming into the space that bridging the traditional institutions and the DeFi world, that bringing their money in and bringing the yield stream from DeFi out to those institutional investors. And also, I think we've seen increasing trend that there are a lot of real world assets coming into the DeFi world through NFTs or through CeFi or DeFi protocols as well. So in general, we'll see that those two worlds will combine closer to each other, either through protocols or through bridge agents.
Great. Yeah, thank you. Momar?
Yeah, I think it goes back to how we define institutions. If you look at a more narrow term, it took like almost 10 years for the institution to start adopting like Bitcoin and accepting is the legitimate asset class. But now with this recognition, I think for DeFi it would be much easier. Another reason why I would expect institutions to get into the DeFi much sooner is I think that DeFi protocols are much easier to understand from the traditional finance perspective when it comes to the business model, like the revenue generation, the valuation of these type of protocols. It is quite straightforward. There is many DeFi protocols such as SushiSwap, Curve, 1inch that are already generating vast cash flow. So I think from the traditional finance institutions, this is really attracting their attention. And we would see a lot of interest because at the end of the day, DeFi is basically a very, very efficient group of fintech companies, protocols that are offering very similar services to traditional finance, but in a much more efficient way. We can see that multi-billion-dollar exchange is being run only by 10 people, like Uniswap. This is just impossible to imagine in the traditional centralized institutions. So in that sense, like there is just a lot of eyes being attracted to DeFi, and I think that the adoption will happen sooner than we all might be expecting.
Great. And Arthur, which project or what type of project, in your opinion, will be able to capitalize on the wave of institutions coming in?
I think it's Aave. That's why we are still so bullish on it, right? I think first of all, I think it's a public info that Aave has a electronic money license, the regulated entity, and I think that also Aave also did some hire on the talent side to talk to the institutional people. I think that I saw some investment bank report that those people actually know what Aave is about. It's a decentralized lending and borrowing protocol. So I think that I think Aave is definitely one of the most mature DeFi protocol out there, and I think the team also have the right approach and they know the right way to bring institution in to DeFi while still sticking to the decentralization ethos of the entire space. So I think Aave should be one of the most mature and earliest DeFi protocol to get institutional adoption.
Yep. Okay. Fantastic. Couldn't agree more. I want to thank all the panelists again and thank the organizers. I think Stanley had to jump off, but thank you for all the participants as well. Feel free to contact, I think, Isa for the NFT souvenirs. And I hope to see you all again soon. Very nice to meet you all.
Thank you, Sandy. Bye-bye.
Thanks.
Have a good evening.
Thanks, guys. Bye.
Bye.
Bye. Thanks.